What's going on, traders? Hope everybody's having a great weekend. Want to do some analysis of the E-mini S&P futures as well as NQ, the tech sector. We'll look over the economic calendar for this week as well as some earnings. We'll also dive into some of the other data points that we like to look at to help form a non-bias picture of the market as well as a game plan for the week. Take a look at some day trading levels as well as we break it down. Thank you so much for joining me. I really appreciate all the subscribers and viewers. Means a ton to me. Of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So let's kick it off. Let's get it started here and take a look at the economic calendar for this week. Last week we had FOMC as well as major earnings. Now that is behind us, and most of the Mag 7 has reported. We just really have NVIDIA. So not too much on the earnings front, but we will still take a look at some key companies that we should pay attention to regardless are still going to be reporting. Let's get into the economic calendar for this week and take a look at what we have in store on that front. All right, here. So Monday, May 6th. So we looks like we have two Fed speakers barking at 12:50, and then okay, interesting. 10 minutes later, we have Fed Williams speaking at 1. Tuesday, the 7th, we have Cash Carey speaking at 11:30. Consumer credit coming out at 3 o'clock. Wednesday, we have more speakers. Jefferson speaking at 11 o'clock, and Fed Speaker Collins at 11:45. Fed Governor Cook speaking at 1:30. Initial jobless claims at 8:30 on Thursday. We'll pay attention to that. And then we have Fed President Daly speaking at 2 o'clock. We close out the week, the 10th. Bowman speaking at 10 o'clock before the market opens. Goolsbee speaking at 12:45. Barr at 1:30. And then at 2 o'clock, we close out the data with the U.S. federal budget at 2 o'clock. Yeah, so that's what we have on the economic calendar. Tons of Fed speakers, but not too much data that we have to be worried about. All right, let's look into the earnings here and see what we have on that front. Anything we want to pay attention to? All right, Palantir. I'm sure a lot of people will be watching that. Walt Disney on Tuesday before the market opens. Celsius. I know a lot of people are invested in that one as well. So that it reports Tuesday before the market open. Rivian after the close on Tuesday. Lyft, Win, Twilio, Occidental looks like it's also reporting, so we'll pay attention to that. Uber on Wednesday before the market opens. Robinhood after the market closes. ARM for the semi, so we'll keep an eye on that on Wednesday after the market close. Roblox Thursday pre-market. And what else do we have here? Plug Power. And anything else that really looks interesting? Mara, I believe a lot of people will be watching. Doesn't, of course, these lower tier names are not really going to be moving the market, but these are kind of some of those meme stock, high flyer growth names that a lot of people do like to trade. So it'll be just interesting to see how that works. But other than that, that pretty much closes out anything notable that I will be, paying attention to. Okay. Let's close this out here and get into some of the charts. We're going to start off with the E-mini S&P futures and the weekly chart, just looking at the price action and how we closed the week, and then see kind of where we are here in the trend sequence, right? The bulls have definitely put up a great fight over the last 2 weeks after 3 weeks of selling off here, and really no surprise, we were looking at a lot of the indications that some type of a counter trend rally would be in order, and that is what we are seeing here. But are the bulls out of the woods completely, or is this kind of just normal price action, right? Now we've been talking a while about the two areas of structure, right, that have been really broken here for the bulls. And that, of course, is going to be right pretty much where we're coming up here. So we're kind of at that make or break moment here for the bulls, right? This is that prior balance zone, right? And we are just simply coming back to retest the prior balance here. Now, if this looks familiar or rings a bell, well, it should. And let's go all the way back. Oh, this is not far enough. Now, what happened here? I'm not saying this is exactly the same. Okay. We had this balance range. Oh, we actually came back and tested it twice, right? We had this balance range, right? Distribution. We had our markdown. But then what did we get? In this case, we actually got two retracements back up to retest that prior distribution zone, right? And you can see that here, one test, we sold. They shot it up again for another test. And then we sold, and that was really the start of that downtrend, right? So we are doing the same thing again. Now, does that mean that history is going to totally repeat? No, absolutely not. The bulls could, of course, just start to break over, recapture here. We'll move price back up. Now, even then, I think that this price action here would be a great step in the right direction for the bulls, right? But they still have one other issue, and it's going to be right here. Okay. Once we get inside of this weekly candle, which is the week of the 25th of March, that low being 52.63, we could call it 65.60, anywhere in that area, then we're really feeling confident about this trend being neutralized. But where we are now, this is the first major step that then we go into kind of a bullish to bullish neutral kind of stance, right? Now, we can't also deny the fact that overall, and we went over this last week, I mean, this is from October, the October swing low. But what do we really have going on here? Right? Here's our high, another high, right? In the trend, no doubt, is still up. Okay. So, don't get anything, wrong, about my viewpoint about being bullish, bearish, or what. We're just following the smaller, movements here inside of the bigger trend. But we have the potential of really coming into a weekly downtrend now. So this right here is that weekly. We've already made the daily, taken out the daily higher low. So we've already changed the trend sequence on the daily. Now the question is, can we do it on the weekly? So it's anyone's game right now, and it's very, very interesting. So I'm going to pull up some of our other drawing sets here, and you can really see how they bulls tried to put price down here, was not able to accept, pushed up, kind of a dragon tail doji, showing that strong buying pressure there. So that's good. That's great. I love that. So let's go into the daily. And take a look here. Now, we've already been over it. You can see still, it's very clear here. You can see this prior zone, right? This is where we're looking at that weekly higher, lower high. And this is the other balance we were talking about right here. Okay. So let's pull out some of our other levels, just so you can see. Now we're gonna concede here for the bulls, right? Got our low, higher low, and we did just make a marginally higher high. All well and good here from the daily perspective. We are for the EMA traders. We are over the 920.50 once again here, all on the daily. that's all well and good from that viewpoint as well. Plenty of room here on our overbought, oversold indicator. We were also watching this, talking about that extreme oversold condition here, looking for that bounce. I believe we were talking about coming into this zero line as well. And here we are. Okay, so let's get into some of our other drawing sets, and we can just also see some of the other ways that we have been looking at it, right? Oh, no, that's not on this chart. All right, let's just look at the weekly fibs here. Okay, this was a different, I thought I was on SPY. I don't have this one on. Okay. It's also very possible, you know, I'm not a stickler for just a single support level, right? You know, I'm more of a supply and demand trader personally. But so we can also say, you know, we can see these lows here on the daily. So we can put something like this up, and we'll see that here in a moment. But we're just looking at this here from the fib view. We could still go up a little bit higher, but look what's happening, right? We're going to come up and retest, backtest the 23.6 here. So basically, we're really going to be watching that 5200 on ES. I think as we start seeing a weekly close over that, bulls have really a really nice case there of neutralizing this and then going for that final hurrah up around 5270, thereabouts, 5265, maybe 5280 if we're looking at some of those wicks, right? So what we're seeing here is that back test of this previous structure breakdown, right? Why is it hunting this out? Because there's liquidity here. This is where all of that, this pain started. Now they're coming back to pick up their buddies. You can see these wicks though, so I don't know if they're going to make it all the way. Maybe they will. So let's move it quite along here. And beautiful test here, right into the golden, pretty much the golden pocket at the 618 here. Let's move it along to some of our other drawing sets, and we can take a look at some of the other areas here that we had already kind of mapped out. Here is another view denoting, right, everything that we need to see and be aware of. Here's that other balance. Here's the weekly. We're coming right up into our zone. Is it possible we head up a little bit higher? Yes. I'm thinking Monday we might see a bit of consolidation. What did we see? A 70-point move on ES, 375 points on NQ. It's very likely we see something on more lines of this. Maybe we end up making a daily flag. I'm open to this possibility. Then we see that push up into here. What happens here? I don't know. As long as, from this view, you know, as long as we're really holding over 5140, I think you're pretty, you know, you're okay. We start coming back down into here, okay, then we can start, you know, we're going to have some other issues that we're talking about on the chart. But as it stands, as long as we hold, basically, you want to hold at least 50% of this prior day's range, Friday's range. 25% most bullish, 50%, okay, we can work with that for a mid-candle breakout. Under that, it's likely we're going to trade down into the lower part of Friday's range. You can easily just do this and mark that off. Under 5130, you know, we're going to start to have some issues. Pullbacks into, yeah, that 40. Ideally holding 5150. We can see that potential bull flag break up into the top part of this balance zone. Offering a nice potential risk to reward for a short trade here. If you are bearish, right? If you're going to play the weekly chart, just depends on, you know, kind of your viewpoints here. But there certainly is that potentiality for the flag and giving the break above. And we've got data points to support both cases. So we shall see. Let's pull up just a couple of other viewpoints here that we have been looking at. Let's look at some of these shorter trends here. Another drawing set that I was actually working on. I was doing this on a smaller time frame, but we are going to just take a look at it here on the daily. Actually, I need to extend these. But you can see here breaking above. Oh, wait, it didn't. What the? Okay, I had another trend here. For some reason, it didn't save. Okay. So we'll see what happens. Here's our balance. If we come up, maybe we get up a little bit above and then end up hitting this trend line. Just another viewpoint to kind of speculate under. Okay. Here's another view. That I have drawn out. So all signs are leading into this big area. So is this a place for a new money long? Not really, in my opinion. You would want to wait for that pullback. Right. And we mentioned some of those trouble areas where we want to watch, getting under 51.30. But really, also watch the prior high. I think under 50, you could really call it 5100. I think that would be the next warning sign. We start breaking under this, Friday's low. Okay, we've got some issues. Very strong candles over the last 2 days. We'll take a look at maybe the structure here, what's created. I do know, obviously, on the NFP print, a lot of some issues here that could be exposed. But we'll get into that maybe when we look a little bit deeper. Okay, I think that's everything I wanted to go over from the daily chart perspective. So talking about getting more granular, I think we'll go ahead and do that now. Wanted to see if there was anything else that I wanted to pull up for this viewpoint. No, we went over this one already. I think we hit them all. Okay. This one, we're not quite there yet. Coming back into this trend line. All right, I thought I had one more, to be honest. And that's not it. That's from last year. All right, that's fine. We pretty much covered everything we needed to from that picture. All right, let's get into some levels here for some day trading, if I could find them. Here we go. Just not enough time. Let's go to 30 days. Okay, cool. All right. Okay, so for bulls, as long as we hold, to me, and this is, we're getting a bit more granular here. So as long as we're really holding, from this viewpoint, as long as we're holding 5150, 5145, I say we are still good to go for the bulls. I think they can make a push probably up into maybe about 20 points more or so. I would say maybe 5185, I think could be a reasonable target here. If we start to get over that 5185, 5182, I think then we could really be looking for that 5200. 5205 test would be the next level there that I would be watching for the upside. If we in fact can accept a 30-minute close over that 5200, 5205, most ideally it's going to be pretty much free and clear, in my opinion, pretty much up to 51.40. So I will be watching that for the bulls. And of course, if we get over that, we can possibly come up into the 60s and 70s, right? So, but if we actually start to break below, I would say 51.45, watch out. I think it would be pretty easy for us to come back, trade into the FOMC high. Wouldn't be surprised to see that get tagged around 51.25. We start getting under that. Take a look at 51.15, 51.17. Start breaking under that for the for the bears. They're going to start to look at that 5100, start drooling over that whole number, and then under that, 20 more points under would take us down to about 51.80 thereabouts. I could also see us stopping maybe 50.90. Also pay attention to that area as well. We start breaking under that 50.80 area. It would not surprise me that we would trade down 50.60 and under that 50, maybe 50.35, 50.40. We start trading under 50.60 in my opinion. So that's what I'll be watching for that here. We've got our levels. There you go. Let's see what we get. All right, let's move right along here into the NQ and look at that snazzy Naz. All right, let's go back out to our daily chart, or let's go to a weekly chart first. And come into NQ. Okay, here we are. Okay, similar situation here, and we're going to be hearing a lot of the same information. Oh, and there was one thing that I forgot to mention. On ES, we are actually seeing it on NQ as well. But another thing that I am noticing, this divergence here, right? We've got price moving up. But what do we have our overbought and oversold indicator doing, right? We have a divergence here, right? And this is a bearish divergence, price moving up, this moving down. Stick it in your, put it in your cap. Just something to keep in mind. Doesn't mean specifically that we're bearish. But it's interesting to see that divergence happening when we're coming into such a critical place on all of the markets. Same situation here on the NQ, our prior balance zone. We have it right here. You should be able to see it pretty distinctly. And now we're coming back up to retest, right? And we've kind of been over this on maybe, I think it's possibly time. I'm going to have to try to find it. But what are we doing here? We're basically playing off a Wyckoff market cycle. So will the mark down be mark 2 down commence next? I don't know. We're going to find out. Okay, so we're coming back, retesting this prior consolidation balance. Can bulls start to neutralize the weekly trend here and come back up? I don't know, but they can still trade up into, and we're going to mark it off here. It's about, you could call it 18, what's the low if you want to get exact? I'm going to call it 18,375. It could still trade up into that 8,375. So we've got our two, same thing, got our two structures there that we want to pay attention to. If we start trading into this one, then this is the bulls are really good for free and clear, and then we can go to 19,000, 19,500, right? Getting back inside of this, we're starting to neutralize the weekly lower high, and into this structure, we've completely neutralized it. So let's see what happens. Let's get into some of our drawing sets here. Same situation though on our candle. What it's looking like as far as the bulls, the bears unable to accept lower, pushing up from the bulls. Equal lows here on NQ, which is interesting, versus the higher lows that we saw on ES, but we'll break it down here into the daily in a moment. Let's also take a look though before we switch over. We can take a look at the weekly fibs and see what we can take away from that viewpoint. And pretty much the same thing here. We are going into the 32.6, the 23.6. There, my dyslexia in full display. Why is this off? There we go. That's fine. We're coming into it right here. Here it is. Line in the sand. You can see the structure. All right. Let's move it along. Daily number 1. Okay, here we are on the daily. So this one I have highlighted the total neutralization of the weekly trend. This area here is the higher, the lower high on the weekly. Right, so we start to get over. Again, I still am anticipating some consolidation after the move that we had. I mean, look what we did from. This is the second. We did almost 4%. Now, of course, we had data with NFP, but huge move. So, is it crazy really to think that for 2 days? It's possible that we see a real two-way tape. We either get that similar high and tight type of flag. Ooh, those lines are real ugly. Oh, that was not any better. There we go. Do we get the mid candle? Possibilities. Do they break under? Come back, retest, then we start to head back down. Which will it be? So again, same place, same thing for the NAS. This is really not where you want to be initiating new money longs. If you are still bullish, you want to be waiting for that daily higher low to be put in. So where could that potentially be? Certainly coming into a back test of 17,800. That could be fine. Again, look for maybe that 25% retracement. So I could even just eyeballing it here, maybe around 17,925. Another area we could look at, and that 50% retracement is going to be a little bit lower. You could even do, if you want a wider range, you could even take the past 2 days and run a fib on that. This is also something that I would consider, something that I would do as well. I mean, I haven't done it, but this is something I could look at, and say, hey, look, as a pivot, I'm now under 17,700. We're under that 50%. We got to be careful on a bigger picture. Then we're starting to neutralize that daily trend, because we're no longer making a lower high or a higher high or a higher low. So that's also another cool thing you can do on that 2 day range for yourself and get some nice levels that way. But I think that's going to be the line in the sand there, pretty much this point. That's going to neutralize this potential uptrend for the bulls. The bulls want to see that push up higher or just come down just slightly, that 900 really. Start getting under 900, 17,900, and they're going to be a little bit in a, okay, we're not looking as bullish, but maybe a neutral bullish on the daily. And then start breaking under that 17,800, 17,700 certainly. Now we've really neutralized the trend into a bearish neutral type of trend. So anything up here for me, bullish to bullish neutral. This is obviously the most bullish over here. Anything under here, bearish to neutral. I think this still stays bearish to neutral. This officially is bearish, in my opinion, back under 17,500. So bullish to bullish neutral, bearish neutral, bearish. Okay. Cool. Do we have any other daily views here that I want to just share with you? Let's see. I don't think I did, honestly. Oh, here we go. Okay, cool. We got this one. And actually on here, I did just actually want to mark off that second structure, which is around that area. Maybe it actually could be a little bit lower. That's fine. So now now you can really see here, as we went over on the weekly, our two structures that we'll be watching. Bada bing, bada boom. Okay, so here we are. You can see, ba-ba-dam, same thing as ES. We start getting closes over here, hanging out. It would be very likely, in my opinion, then we would head up into this area. So you got these, you've got these zones here you can watch out for at that 18, basically 18, 20 to about, you could call it 18,100, 1895, something like that. All right, let's look at some NQ levels here from the day trading perspective now. Let's go into, say, intraday. Let's do a 30-day. Let's throw it on hourly. Bada bing, bada boom. Let's go to video day trade levels. Here we go. Okay. Cool. All right. So, for the bulls, what do they need to hold here? I'm going to give them a little bit of leeway. Do I want to give them all the way down there? You could make an argument. And I think with the NAS, you're going to have it. So, I think that that's fair. Because that's also this. Okay. So, here we are again, basically watching the 17,900. We hold 17,900. I think all is good in the hood for the bulls. We can look for potential trades up to 18,075, maybe 18,100. Wouldn't be surprised for a wick up there. Watching that area, if we break above the 18,075. We hit 18,100 or maybe possibly go back over and then fail back below there. Could be a nice short setup if something like that happens. But above 18,100, and I think if we start to see some 30-minute candle closes over that 18,075, we'd be looking to trade up into basically 18,200, 18,179, 70, 80, somewhere in that zone. We start breaking over that. Bulls are going to be targeting 18,300, 18,330. 330, 335 would be the next upside target for me for the bulls. Starting to break under 17,900, then I'm going to be looking for trades to come back down. Watch, we do the same thing. I think we could probably come back, test these highs from FOMC right around 17,800. We start breaking under 17,800. Watch, we could trade back down all the way into 17,630 area, maybe 625. We start breaking under that. I'm going to look at 17,550, 17,535 area right here. And if bulls start to give up that, bears will then be targeting, in my opinion, probably back down to 17,430 around that area. And we could see a little bit of buyers around 17,490. 500, they could step in as well. So just keep an eye on those whole numbers, of course, as always. But they start getting under that 17,425 area would be my next short target for the bears. So here we go. Here are the levels. That's what I'm looking at for the NAS. Be careful, of course. with your sizing. And certainly if we do see some of that consolidation this week, it might be good for some hit and run trades rather than catching some bigger moves. But we still do have a higher VIX, even though it has been coming down. So the ranges may start to get a little bit tighter as we're in the 13s right now. So we'll take a look at that in a moment. All right, that's all I've got for day trading the NQ. And so let's move right along. Let's take a look at some of the other charts that we like to analyze every week. Let's look at the dollar because we definitely have some interesting developments here on the Dixie. Let's get into the daily chart. Okay, so here's one of our views that we had on the dollar. We were talking about this potential bull flag, and look, it tried to break out, came right into this 106.50 area, and then just completely died. Failed breakout here with some of the data from the Fed and their rate decisions and non-farm payroll. Just going to extend those trend lines here. However, what happened, right? We came all the way down, and Friday we saw a really nice recovery, and it actually ended up closing back over 105. Now, in the last week's video, and let's go to our other view of the dollar that we normally look at, but here it is. But oh wow, look at how perfectly, right into 104.50. Look at that. Okay, so we in last week's video we were talking about my voice getting all. Let me drink some water here. Okay, last week we were talking about potentially having the rally in the market, right? And the counter trend rally would lead us into 105, and then from there we might want to consider a short position. Well, here we are. We broke down. I'm surprised we got down that far, but the fact that we closed above 105 was interesting for me. Full disclosure, I did open up some puts that I am swinging for a couple of months out. So I'm going to be taking the bearish side of the trade overall and try to play that weekly chart. So wish me luck. And we're kind of playing out exactly how we thought here. I thought we'd stop at 105. We didn't, but the fact that we closed over 105 pretty much is that setup that I was kind of speaking over the last 2 weeks. So, we'll see. But definitely a breakdown here in the dollar. Let's see what happens. I'm going to certainly be watching right, because we just closed on the line. But if we see price start to get back over if we start seeing the dollar close back over 105.25, but really I would say the 105.40, 50 would be the strongest. But if we still close, say over here, this would be a recapture of this trend line. Look for the dollar to come back up into that 105.50 area. We start seeing closes back over here like so. Look at my candles, very nice. We'll then watch out. We're probably going to make another run for this trend line, and then potentially what we might see is a breakout back above, a BRB setup, one of my favorites, and then it comes back, boom, retests, and then we get back up into the equal highs for that next potential move. This only will happen if we start seeing closes back over 105.45, thereabouts. First step, 105.25 to get back inside. So let's see. Okay, let's look at TNX because we haven't looked at it. Actually, I'm just kind of mad at... I haven't looked at it because I'm angry at Schwab for changing this over, the symbol. But that's neither here nor there. Okay. False breakout. Let me fix this trend line a little bit. Okay, there we go. False breakout here, right? We broke out above, doom and gloom, okay, and then back under, right? But we're still back in the channel. Definitely not what you wanted to see for, well, I mean, not what you wanted to see if you were bearish, I would have to say. But the fact that we are still in this trend line, I mean, it's all meaningless to me. This thing could go down here and just come, and then just, we're still in the trend, right? Which is still in the upward trajectory. This was a fail. I'll concede that, sure. And don't get me wrong, I'm not, as I said before, I'm not one of those guys we're going to see the COVID lows again or anything like that. So, you know, I'm not rooting for the downturn like some people are on Twitter. This is just simply a trade. And we're just, again, you know, trying to let the charts be our guide here. If this is breaking under this trend, okay, then we're a lot more constructive. I like that, you know, but we're not. So if anything, if we're going to make this, say, a regression channel, this is still not even, and it's driving me crazy. We're at 50%, right? I'll just do it this way. More or less. I didn't do it perfectly, but you get the idea. So this could just, and then head back up. We'll see. One step at a time for rates here. I mean, technically, obviously, I mean, this is just, these go up out, and they, you know, they making everything more expensive. So, you know, technically, do I really want them to go up? No, of course not. Okay, let's move along. So I will say here, overall, I think we're making, the market's making a step in the right direction as far as giving us some inflationary cooling, but still not really out of the woods. Just want to peep at this from, yeah, it's still over 4.3 or 4.4 even. 4.3 was that big area here. You really, for bulls, really need to start getting under 444. This might just go sideways for a bit. All right, let's get into some of our other data points on the market and close up the video. Appreciate you guys spending the time with me every week. And let's get into some more of our data points here that we like to look at. These often give us sometimes a clue about what's really going down under the hood. So before you start and run away and think you just got all your levels, that's all you need. Trust me, that's not all you need to do. Looking at these other factors are really important as well. All right, so what do we have here on the VIX? We've broken back below that 15. I think that that's very encouraging for the bulls overall. I'm going to watch to see what happens. If we come back down a little bit into the high, the low 13s, as we get closer to that 12.75, 13, it's going to be interesting to me to see how VIX starts to react here. I'm also looking here. What do we have? Low, low, higher, low, higher, low, higher, low. Here, could this be a spot where it's just from here, another higher low from this swing low? Oh, we'll have to see. I don't have a particular level here, obviously, and you know, I kind of just use that 15 to that 15.75 as our pivot. So for me, from the volatility perspective, we're looking a lot better on the VIX for the bulls. Okay, put call ratio is even, nothing too extreme here to be worried about. Okay, let's go along into our internals on VIX. This is where it gets a little bit interesting for me. VIX future is still pricing in higher, more volatility. So warning sign 1 here, VIX futures still above the 0 line. VIX monthly versus 9 days still above the 0 line. Warning sign number 2. Warning sign number 3, although VVIX now all the way down here in the dumps, We are right back in this complacency zone. Every time we get into this 75 area, watch out. It would not surprise me at all, especially with these all giving warning signs and with VVIX here in this crucial zone. This is just for me, it's just setting up for a big move in volatility. How that equals to the market, I'll leave that up to your own devices. But this is warning flags for me personally. What I will say, let's look at something that's not a warning flag. Even it out. The bonds. Look at these 3 to 7 year. Oh, look at this. This is good. Bonds are acting very nicely. This is what you wanted to see. Boom, pushing up, trying to neutralize this trend. This now moving down, still above the 50-period moving average here. So we had made our higher high here. Technically, could this just be putting in a higher low? A lower, excuse me, a higher low. Certainly could be, right? I'm just going to duplicate this, put this here, because this is still higher here after making this higher high. So there is still that threat, but this is looking good for the bulls and the bonds. Obviously, this is going up and it's causing TNX to fall. TLT we've been watching here, and it is doing what it needs to do. We've been watching this kind of inverted head and shoulders here on TLT. And actually, let me go back to, because this is, let me go pull this actually up on the big chart, so we can also see what's happening here. That is really good for the bulls. Right, so we had this huge trend line. Wow, son of a... Okay, so we had this huge trend line that we were watching, right? Boom, 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 broke above, came back, and really gave us a scare. Gave me a scare here about breaking this, right? And this is why sometimes when you're swing trading, especially if you have time, you gotta wait for those weekly closes, right? Look what happened here. Again, one of my favorite setups, putting in the BRB, but almost closed the week below, but actually ended up recapturing. Now, we still have issues, right? This TLT could move up into 91 and then reject. That certainly is a scenario. Right, they're not out of the woods. But the fact that they've recaptured this trend line on this bigger picture trend line on the weekly, that's great. Yes, this could still just be a bear flag. It's starting to invalidate maybe a daily kind of bear flag thesis. It seems to me that it would be a little bit more likely that we get a little bit more upside. I don't know if we make it all the way to 91, but if that happens, this certainly could drive the market higher. If we do see TLT come into that 91 area. Excuse me, 91.85, maybe 92. But you can see here the inverted head and shoulders, right, that we're kind of watching. That also, you know, this was just scary. They even closed below it one day, and then next day it got back over. But nice move there. I think that's definitely a constructive data point in the right direction. Can it continue all the way to retest this major structure breakdown? That I don't know. Did just create a huge gap there. Okay. So that's good. Bonds, looking good for the market. The only thing I'd say is from here, this could just, you know, I don't know if this is really the low. Maybe we get Something like that. If this happens, this is that's bearish. But what we can say is that what we could see is price just come back and then come up and do that. In which case this happens, this will come back down. That would be, and we kind of double top there. You know, that would be the most bullish scenario. You would want to see that. This come down, that would go up, this would come up. As this goes down, that goes down. And then this ends up breaking. And then we probably come link up with the 50 at that point. See what happens there. So, interesting scenarios there on the bond market. Okay, we already went over VIX. We went over the bonds. So let's take a look at the transports. Haven't looked at those in a second or in a minute. Dow doing what it needs to do. We talked about this level. Boom, 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 boom. Back up. It's not quite there yet for that retest. Transports got ugly there for a minute. Coming back though, gonna be an issue here. Coming back to back test the daily 200. Say this could be a bit of a bearish canary in the coal mine. Watch that. Watch to see if transports can recapture 1550. I would say 15,550. Unless that happens, could be an issue. Okay, what else we got here? Oh, some more of the bonds. Let's look. Okay, yeah, this was something that I wanted to go over. I've got SPY on this one, but even though this is on ES, that's fine. SPY. Higher high. Marginal higher high. Junk bonds. Divergence. Another possible canary in the coal mine warning sign there. You would expect this to be making a higher high too. I mean, technically, sure, from here. But this shouldn't be down. This should be up. Breath, new highs versus new lows. I don't think... Oh, we made a little progress here. Oh, we're over 100. Okay. I like that. Making steps in the right direction. Sure. Am I convinced on that? 100? 100 reading? No. Not yet. This was 6. This one got to about 100 and then came back under. Look what happened here. This one got, well, this one got to 94. Okay, so that's a little bit better. This one got to 78, and that one actually played. $75. I think that's a little bit better of a step in the right direction. This one got to 113 and then collapsed. So all I'm saying for this one is that I think, you know, above the zero line, great, but let's just still be careful. I want to see this 150, 200, then I'm feeling better. It's still not far enough away from the zero line for me to say, okay, we're totally out of the woods. It could easily just come back down and back below zero. But at least we're a little bit more above, so that's good. How many stocks are trading above their 50-period moving average? SPX 50 are. We hit that 50% like we were talking about. Came down. Still under 50%, making a move back up. Yeah, I would really like this to be closer to 50 again from the move that we made. We're up 70 points on ES, and this isn't back near 50 or over 50. Meh. Kind of weak sauce for me. This one's going to be a bit slower, so I don't take quite as much stock into this one, pun intended. But I wish this was a little higher. Still under 50, but we'll call this, until this is over 50, is still a bit of a warning for me. But what else do we got? I think that's about it. We've done it all, guys. We've done it all. And we're right on time, about an hour. Let's take a look really quickly at the RSP, equal weighted SPY, just to see how much is dragged by the Magnificent Seven, or how much is this of the entire market. Well, look where we are, just the same spot again. We want to see a broadening out of the market. Need to see RSP back over 165. Until then, I think the potential bearish case still remains to see something like this. We will find out over the next 2 weeks or so. Maybe 3 weeks. All right, guys. Well, I really appreciate y'all taking the time to spend with me preparing for the market. Remember what we always say, a prepared trader is a profitable trader. So I hope you got something from the video. If this is your first time joining us and you enjoyed the content, if you find the kindness in your heart, subscribe to the channel. We're almost there, 1,000 subs, trying to get there. Last time I checked, we're at 986, I believe, almost there. Like I said, when we probably get to around 990, so just like 3 or 4 more subs, I'll really start considering what the giveaway is going to be for the last either 5 or 10 subs to the channel. I really appreciate all the support. Remember, again, a prepared trader is a profitable trader, so plan your trades and trade your plan. I hope everybody has a great rest of the weekend. Spend time with friends and family, and then do that prep. Get ready. Let's have a great week. I'll see you guys on the internet, the Twitter, all of that. Thank you so much. Take care. Have a great one.